This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on November the 1st, 2013. Our time is 8:38 in the morning Mountain. Radio show runs on your favorite radio stations. Also, the shows are archived on Harold's websites, HESradio.com and rarecoloreddiamonds.com. We have a podcast through iTunes. Put iTunes on your portable device, type in World Financial Report on Radio. You can take our radio show anywhere you go. Should mention, Harold does daily market commentary. On his websites, you can find it on the podcast sites as well. Interesting week in the United States. The Fed kept quantitative easing in place, still buying $85 billion worth of bonds every month. Interest rates staying the same. And it looks like this could be in place for quite some time. In fact, they're talking about 2015 before interest rates were to go up. And personally, Harold, everyone's talking about tapering and, they could be tapering. Every time they make an announcement, they don't taper. The next time is the time they're going to be tapering. The truth of the matter is they're not going to be tapering for a long, long time, and that is a positive for hard assets.
I believe it is for the long term for certain, but for the short term, obviously, it doesn't seem to be doing anything for the markets at all. And we do know that when they do start to taper, because we've seen when they spoke about it in the past, how the market has reacted, it's very negative. So obviously at this point here, they want to keep the stock market up if they can, and the best way to do that is quantitative easing. Again, if I was a stock investor, I would be certainly concerned about the fact that, number one, they are going to have to end this one of these days. I don't know where the money's coming from. I mean, at this point here, we know the government shut down for 2 weeks, which was not only embarrassing, but devastating economically, and, again, sent concern to all the trading partners type of thing. And then what they decided was to raise the debt ceiling till February, but give them an open checkbook. Basically, they're going to spend trillions of dollars that they don't have, so it's only going to make the situation worse moving forward. However, again, this is a longer-term situation, and, if they are going to keep quantitative easing going, it has to be good eventually for precious metals and hard assets. We've seen it in the past. In fact, when quantitative easing was at its strongest, gold was moving substantially. That's when it moved up to $1,900, and that's when the government decided to bring down the price of gold. As we're taping the show, gold has not had a good week this week. The U.S. dollar did strengthen a bit, but gold's down $13.80 at $13.0990. Silver's trading down 6 cents at $21.95. Platinum's up $2 at $14.53, and the palladium market's even on the day at $7.41. The Dow is up 55 points at 15,601. The Nasdaq is up 4 points at 3942. The Toronto Stock Exchange is up 19 points at 13,380. The U.S. dollar, which was down to 79.20, is now up to 80.70. So it did make a bit of a rebound, but again, that's like a dead cat bounce. It's just doing so poorly. The U.S. dollar is in big trouble. U.S. dollar is trading at 80.70. The Nikkei is up 126 at 14,201. And oil spent the entire week down, dropped $1.27 today at 95.11. We're still extremely bullish on oil, and the fact is that the long-term trend for oil and the long-term trend for metals is still very strong. It's the short-term trend that we need to be concerned about. And again, if you own physical metal, the market's just doing its thing. It's trading in a range at this particular point. I wish we had more exciting news because, again, the metals are going to break out. It has to break out eventually because of the action-reaction to the markets. And the fact is that when you print as much money as the Federal Reserve is printing and interest rates are remaining low, that is a recipe for substantially higher gold prices. In fact, there is a direct correlation between gold and the U.S. dollar. And as the U.S. dollar falls, gold should continue to move higher. However, at this particular point, that has not been the case. In 2011, when gold hit its all-time high of 1920, the U.S. dollar was at 72.5 cents. So basically, we're about 8 cents away from that happening again. And again, as we see the U.S. dollar continue to break down, that should increase the price of gold. So at this particular point, we're trading within a range. I don't think that we're in any danger. I think that when the market gets to these lower levels, like for example, 1,300 or 1,290 in that area, it's a very good buying area. We've seen the bottom of the market, in my opinion, and many others, at below the $1,200 level. But again, at this point here, the market is definitely trading in a range, and when it gets down to these lower levels, it is certainly a good buy. Same scenario for silver. Silver's trading right at around $22. We've seen it below the $20 level, so the market has recovered somewhat. But the strange thing about silver is that there's definitely a shortage in physical silver. The U.S. and Canadian mints are out of silver, basically. They can't mint. They're very popular silver coins. So how in the world does the price of silver drop when there's a shortage of the physical metal? In commodities, supply and demand is the key factor for metals moving higher or lower. If this was the oil market and there was a shutdown of the refineries at a peak oil time, the price of oil would be skyrocketing because there would be a supply and demand situation. Demand would be high for oil, supplies would be low, and that's a recipe for substantially higher prices. The same scenario with grains as an example. If there's a drought in the Midwest and there's very few soybeans or corn or wheat, the prices always rise based on that news. So how in the world is it different with silver and gold? How in the world is it different when there's a physical shortage of silver, when people are basically lined up in order to buy physical silver? They have to wait weeks in which to get it. There's a premium added to it because there's so little of it. And why in the world would the price of silver not go higher when it's a commodity the same as oil, grains, food, and everything else? So again, as much as I hate to say so, because again, you don't want to necessarily believe that the markets are really played with and toyed with at this particular point, but it's got to be the most obvious thing in the world, because in the 35 years that I've been in this business, I've seen pretty well everything. And again, when they get into a situation where these markets are supposed to be free markets, they're supposed to trade based on fundamentals and technicals, and basically when you take that away, and basically manipulate the market for your own reasons, the only people that can do that are the governments. Now, we know that the banks like J.P. Morgan and Goldman Sachs have been involved in manipulating the gold and silver markets, but it's basically the government that has not come down on them. The federal government, which is the Commodity Futures Trading Commission, is really the federal agency that polices the commodity markets. And to be honest, they've done absolutely nothing to correct this situation. It's almost an embarrassment. The fact is, Randy, what was the name of the company in Chicago, the FCM, that commodity firm that stole all the money from the segregated accounts?
Well, there was a couple. There was MF Global, but there was also Peregrine. There was another Peregrine.
Yeah, but MF Global was the one that really was concerning, because a segregated account where you put your money into is sacred. It's like a escrow account in real estate. When you're buying a piece of real estate and you put your money into escrow, it's untouchable. No lawyers can take it. It's the same scenario in commodities. When you put your money into a segregated account, it's the same as an escrow account. And this company, MF Global, basically stole the money out of the segregated accounts and kept it for their own benefit. Now, it's the exchange in Chicago where this transaction was actually accomplished. Now, they are responsible for returning that money to clients. It's their obligation to make sure that the markets are credible and return that $1.1 billion, and that never ever happened. I personally don't understand how after something like that could happen, why people would actually invest in those kind of markets, realizing that if it happened before and nothing was done to correct it, it's going to happen again. It's the same scenario as what happened in Cyprus. The money was stolen out of the Cyprus bank accounts. The poor depositors lost close to 50% of their money, and nothing was done. They were given worthless bank stocks, and no government or no government agency stepped in and said, this is illegal, this isn't right, put back that money, or else. That didn't happen. And I'm 100% convinced that what happened in Cyprus will happen again in Canada and in the United States and Europe. And the fact is that I believe it was a test to see how people would react to the money being stolen out of their bank accounts. Another thing is happening today, which is Friday, November the 1st. Supposedly what's happening in the United States is that 25% of the population in the U.S. is on food stamps. It's that bad. 25% of the U.S. population is on food stamps, and evidently today, November the 1st, on a Friday, as we're taping the show, they're preparing for martial law, evidently. Homeland Security has put billions of dollars into martial law, basically, because they believe we could see in the United States rioting Greek style, like what happened in Greece, based on the fact that that the poor are not going to be able to get the full benefits of the food stamp program. On top of that, Obamacare is a total disaster. I understand that 6 people so far have been able to sign up for it. That's how ridiculous this whole scenario is. So, things in the United States are very bad. You've got 25% of the population on food stamps. You got 75% of the population basically living paycheck to paycheck, meaning that if they lose their job or they lose their paycheck, they're out on the streets. On top of that, you've got all these other scenarios. You've got the food stamp situation going on, which is quite concerning. You've got all these things, and again, people continue to pour their money into a stock market, and they're investing in a country that is basically bankrupt. So, again, my philosophy has always been in these type of times where they're so uncertain is to be very conservative, not to speculate, not to heavily leverage anything, not to take unnecessary risks. And I know that we're all a bit frustrated because the metals markets haven't been moving. But basically they are holding in there. They're still at a very high price. Don't forget, gold has gone from 250 to 1900, pulled back to 12 and change or 11 and change. It's still trading at $1,300, and the dollar is still weakening. As far as I'm concerned, the metals markets are going to run again. It's just a matter of when it's going to happen. Make certain that you have your positions in the market. Again, $1,300 gold is an excellent entry level because we do believe the U.S. dollar will continue to fall, and that will eventually lead to gold prices not only breaking the $1,900 level that we saw back in 2011, but it also should propel us to $2,200 to $2,500, and further than that if the complications are severe, as we think it is. So, again, Randy, things are not great here. There's still extremely high employment. The thing is that they show 7.2% unemployment, but in all reality, the unemployment in the United States is closer to 15%. It's a frightening situation to think about it, and over 30% unemployment basically sitting with college kids. So, all in all, the scenario in the United States is extremely poor. And again, as the U.S. dollar continues to fall, the metals will continue to strengthen. There's no doubt about that. Again, I know it's been concerning that the metals are trading in a range, but it will break out, and it is staying in that range at this point.
Harold mentioned job numbers in our newsletter that we put out every week free of charge. We send out. If you'd like to receive it, speak with Worldwide Precious Metals, 1-866-623-2002. Website www.pmc.com. In our newsletter, the job numbers out of Europe have come out, and they are absolutely horrible. And this is something that is a major concern in the United States, also in, obviously, the Euroland as well. Bank depositors lost 47.5% of their money in Cyprus. Could a bail-in happen in Canada? Worldwide Precious Metals, they invite you to an exclusive free seminar about the shocking truth of the Canadian banking system. Monday, November the 18th. And due to overwhelming demand, a second seminar has been added in Edmonton, Tuesday, November the 19th. And it's going to be at the Holiday Inn Conference Center. We all know where it is. We live in Edmonton here. It's South Gateway Boulevard. Worldwide Precious Metals will be in Calgary in 2014. They will be putting on this seminar in 2014. But we had overwhelming response from Edmonton for these free seminars. If you would like to go, register. Speak with Worldwide Precious Metals, 1-866-623-2002, or sign up online at www.pmc.com, www.pmc.com, or 1-866-623-2002. Get some money out of the banking system. When Worldwide is here in Edmonton, November the 18th and 19th, they will be offering free private information sessions about the ultimate hard currency, gold and silver, Speak with them about the free seminar. As well, speak with them about investing in hard assets like gold, silver, platinum, palladium. Get your name on the list as well for our free weekly newsletter, chock full of great information. One of the stories that we had is from Richard Russell, and I think Harold was touching on patience, and so did Richard Russell. He's been writing the Dow Theory letters for well over 50 years. He says, as for gold, I continue to think that this is a game of patience. The world is battling the forces of deflation, and it's going to take an increasing amount of quantitative easing just to stand still. The most interesting story at this time is gold. It's a question of buying stocks at all-time highs after the averages have doubled, or gold, the despised metal that appears to be pushing out an impressive base. I realize that money managers have to show profits or income in a hurry, but my subscribers and I have time in our hands. We have the luxury of sitting on the sidelines or buying and waiting for results. My feeling is that buying gold just off the current base will work out, and the risk of substantially lower prices is minimal. As I write, gold is in the process of entering its already impressive base. I continue to like the action of gold, now well above its red trend line, and you can see in the newsletter the trend line that Richard Russell is talking about. The key here, though, he says, remember, patience is key. And when it comes to insurance policies in your portfolio, gold and silver is a must-have at all times. Speak with Worldwide Precious Metals about the free seminars in Edmonton, as well about investing in gold and silver today. 1-866-623-2002, the website wwpmc.com. Another person that is highly respected is Jim Sinclair. Jim Sinclair correctly predicted that gold would go to $1,650, and he was basically months off the exact date that he predicted. He was right within the wheelhouse. Greg Hunter, who was formerly with CNN, interviewed Jim Sinclair this week, and he said, annihilation of the U.S. dollar is coming. Jim obviously believes that there's a financial calamity just around the corner for the United States. He contends we are facing the annihilation of currency. We're facing the shift of America as the leading and most influential nation of the world to some form of banana republic. If it wasn't for food stamps, we would be facing long lines of people waiting for free food. For gold, everything hinges on the U.S. dollar. I think the dollar gets hammered. I believe we are headed for hyperinflation. One of the many black swans, according to Sinclair, is the possible abandonment of the U.S. dollar by Saudi Arabia. If Saudi Arabia stopped selling oil only in U.S. dollars, what would that do in the buying power of the buck? Sinclair says gasoline would be $10 a gallon very soon, without a doubt. He also goes on to say he predicts retirement funds and bank deposits are going to be taken by the government. How much of your money could you lose? Sinclair says in Cyprus, it was a total of 83%. Cyprus is the blueprint, and it's what we are going to experience here in the United States. He says, Sinclair, who has just accepted the position of chairman of the advisory board of the establishment of the Singapore Gold Exchange, he says the exchange will trade physical gold only and not future gold. You have to make delivery, meaning there will be no naked short selling or manipulation of this new market. This will emancipate gold from the paper price. How high will gold go? Sinclair predicts by 2016, gold will be $3,200 to $3,500 an ounce. By 2020, he predicts emancipated gold will be $50,000 an ounce. And I know over in India, where the government is trying to control the gold market and limit the amount that citizens can buy, people are paying premiums for gold over there, Harold, of $100, $200 an ounce premium just to get their hands on gold. We're seeing silver. Silver is becoming very, very popular in India because of the limits that are being put on gold. And it's just a matter of time. We're seeing China building up their reserves in gold and silver. We're seeing it in India. And obviously the government's becoming concerned, trying to put a cap on things. but it's just a matter of time before this market does break out. And when you listen to people like Richard Russell and Jim Sinclair, it's a matter of the timing. And this is very similar to prior to the financial crash in 2008. I remember a friend saying to me, Randy, you talk about these things. When are they going to happen? We don't know the exact date. But the truth of the matter is, all you need to do is listen to our radio show, follow the news, and you know that we're headed towards another financial crisis just based on what has happened in the world, not only financially, but geopolitically. And Harold, people need that insurance policy in their portfolio today.
You sure do. Again, you don't know when it's going to happen. The fact is that the markets are doing what they're doing because of the necessity of the government at this particular point. But the fact is that the long-term trend for the metals is still very, very strong. And again, the fundamentals for it haven't changed really at all. In fact, they've gotten even stronger. So I know people are getting a little bit bored and concerned with the market, but the fact is that that's the way that they want it. And from my experience, the times when metals or particular commodities tend to run is when the fundamentals are strong and nobody's paying any attention. So we're paying attention, and we're not the only ones that are. And again, I know we say this every single week, and you may get tired of the fact of us saying it and not seeing it happen, but we've been trading this market now for 13 years, and we've been right in the market for an awful long time. Obviously, the fact that the market is in a trading range at this particular point, there's a particular reason for it. But all the fundamentals are there for this market to run, and again, we're just going to wake up one morning and find that this market is starting to run, and the speculators start to get back in. So again, my suggestion is, if you own precious metals, continue to hold them. I have not sold any of mine, and we will see substantially higher prices. We have to eventually, just based on the weakness of the U.S. dollar alone, and that's not the only factor that will move gold and silver higher.
Thing to keep in mind, you never want to get rid of your insurance policy on anything that you have, and you need to have an insurance policy in your portfolio. That is gold and silver. Worldwide Precious Metals of Vancouver, leading Canadian precious metals bullion dealer, is recommended by Harold Siegel for over 10 years. They're the experts to trust and work with in this very specialized market. When you go to a store and you buy something of quality and you paid a fair price, the old saying is, you only scream once? But obviously when you buy something inferior for a low price and you think you're getting a deal and it turns out to be junk, obviously you're screaming a lot more. And the thing to do when it comes to precious metals, deal with the experts. Deal with the people that know this market inside out. Start your own precious metals investment account today. All gold is allocated, either wholesale or premium. They're there to help you maximize profit, minimize risk. You have instant liquidity in and out of the market with just a phone call. 24/7 online access. The metal can be stored in your behalf, insured to the full value of your investment. Ask about domestic or foreign storage and premium storage in specific coin and bar form. Stored metal is outside the banking system, and they can also deliver metal to your door. They're Worldwide Precious Metals. They have worldwide access to physical precious metals that you want today. Connect with them, www.pmc.com or 1-866-623-2002. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on November the 1st, 2013, the day after Halloween. I think the general consensus about Halloween is not enough kids and way too much candy. Everyone's sitting at home waiting for the kids to come, and I think next year I'm going to go out and hire a whole bunch of kids and charge people. We'll come by your house for a small fee and lots of candy, and we'll make you happy so you can hand out some candy. It's amazing. Everyone has that same dilemma. I was talking to somebody in the elevator on the way here today, and they were saying they went over to their daughter's house, and no one showed up. They had lots of candy, but no kids. We have to fix that. Maybe the dentists have done such a good job educating everyone anymore. I don't know.
It's possible.
It's possible. Don't forget to connect with our radio show on the radio. We're online on Harold's websites, HESradio.com, rarecoloreddiamonds.com. You can do a podcast with us as well through iTunes. Put iTunes on your portable device. We go anywhere you do. Type in World Financial Report on radio, and you will find us there. Harold does daily market commentary, and that commentary is on his website as well. You can also find it right on the podcast site. Don't forget, depositors in Cyprus lost 47.5% of their money, and Jim Sinclair is that story we had earlier in our newsletter. He feels it's 83%. Could a bail-in happen in Canada? Now, Worldwide Precious Metals, they have an exclusive free seminar that is being put on by an accountant. He has spent hundreds and hundreds of hours going through the books of the Canadian banks and countries. The seminar was just done here in Toronto recently, and people walked out of the room literally shocked. This is something that would normally cost you hundreds of dollars to attend. It's free. It's Monday, November the 18th in Edmonton, and due to overwhelming demand, a second seminar has been added in Edmonton Tuesday, November the 19th. It's at the Holiday Inn Conference Center, and obviously that is just off the White Mud. And they're going to be going to Calgary in 2014. Register now for this eye-opening financial seminar. It's absolutely free, but very limited amounts of people will get to go. In fact, we're very close to filling all the seats right now. 1-866-623-2002, 1-866-623-2002, or sign up online at wwpmc.com. It was an interesting week in the world of diamonds. One quote that I found, and I think when you really think about it, it makes a lot of sense from the person that it comes from. Harry Winston. People will stare. Make it worth their while. And when you're wearing a spectacular diamond ring or a necklace, as we've seen Harold put around the neck of different hosts on Bloomberg, there's something about it. People, they do stare, but they stare for all the right reasons. And we have a diamond that you can put on your finger and put it into a ring, and people will be staring. It's our featured diamond of the week from rarecoloreddiamonds.com, a 1.01 carat oval cut, fancy, vivid pink Argyle from the Argyle Mine. The Argyle Mine just recently had its tender. 64 diamonds went out the door, 64 diamonds for the entire world. They had record prices, including one of the diamonds going for over $2 million. And Harold has been on Bloomberg. He was on a couple of weeks back. He was interviewed by Deirdre Bolton in the past, and just recently by Carol Masser. We have both of those interviews. You can go to Harold's website. You can see it at rarecoloreddiamonds.com. You can get the newsletter from Harold. We have both of those interviews as well. You can see them. And two great stories this week. Diamonds could be an investor's best friend as demand rises and supply falls. And buy the engagement ring now, the coming supply squeeze in diamonds. And Harold, Bain & Company has done a report. We've spoken about it in the past, and they have said for quite some time, with the amount of people that are interested in investing in diamonds over in India and China, you're having more couples using engagement rings, diamond engagement rings, something that was not the case in the past. We're seeing mines, no new mines, very low new supply, and yet we're seeing high demand from the Far East. And it's going to equate into a situation where diamond prices are going to go up very high in the years to come.
Well, that is very exciting, and we are banking on that because that's one of our major recommendations and major investments is diamonds. The fact is, certain diamonds, not all diamonds, but certain diamonds have track records, are phenomenal investments, do well in a good economy and in a bad economy. So the thing about diamonds is, investment quality diamonds, they don't trade on exchanges like commodities and stocks do, so you don't have that trading back and forth that causes the market to be volatile. In fact, what really moves the price of diamonds is supply and demand and the rarity of the diamond. So the fact is that our featured diamond this week is one of the rarest diamonds you could ever possibly own. It's a 101, so it's over a carat. It's an oval cut, which is one of my favorites. The largest looking diamonds are ovals. It's a fancy, vivid pink Argyle. It's one of the rarest Argyle pink diamonds that you could possibly ever own, and it is one of the best investment diamonds you could ever buy. Vivid pink is the best color you can get. The way that the Gemological Institute of America, GIA, grades diamonds, especially pink diamonds, is in this fashion. Faint pink is the lowest color. You could barely see any hint of pink. Then it goes very light pink, then light pink. Then we start to get into the fancies. So fancy pink actually is a very soft pink, and we have some fancy light pink diamonds that are really stunning and beautiful. But then you start to get into the really strong colors, the fancy pink, the fancy intense pink, the fancy deep pink, and the best of them all, which is the fancy vivid pink. 95% of Argyle pink diamonds are under a quarter carat. So they're the most concentrated form of wealth in the world. This diamond that we're showing as the featured diamond is 4 times that size. It's over a carat, which is ridiculously rare, and very, very, very few diamonds like this exist. A diamond like this one will double in price every 2 years. And the closer we get to the mine closing down, which is going to be in about 6 years from now, there will not be any more pink diamonds. And the price of this diamond could increase 10 times what the prices are today. So investment-wise, when you look what's available out there, as risky as everything is, with interest rates down to 2% in the bank and inflation higher than that, you make no money keeping your money in the bank. And obviously, with the seminars going on, we all understand that keeping your money in the bank is not a very safe investment, and getting 1 or 2% return is not a good return. So obviously, people need a return on their investment, and by not getting it in the bank, because interest rates are so low and the danger of keeping your money in there, people are looking for alternative investments. What it also unfortunately makes people do, because they're not making any return by keeping their money in the bank, it forces them into the very risky stock market, and that's where most of the general public will lose all of their money. There are other investments out there that are called alternative investments that do extremely well. So obviously, with the state of the world economy the way it is, capital preservation is the most important thing, being able to keep your money. Because if you put it into the wrong market and that market goes against you, you're going to lose that money. And depending on how old you are at this point, it's very, very difficult to make that money back. To put money into an Argyle pink diamond, an Argyle pink diamond will increase by 15 to 20% a year. And again, the closer we get to the mine closing down, you'll see those prices increase substantially. With a vivid pink Argyle, which is the best color, again, those diamonds are going up a little bit faster than other colors because it's the very best. The saturation of these diamonds is extreme. It's almost red in color, and we know the red diamonds sell for close to $4 million a carat. So a diamond like this 101 oval, fancy, vivid pink Argyle is one of the very best Argyle pink diamonds available in the world today. The chances of ever finding one over a carat is slim to next to none, and that particular diamond will make you more money than probably any investment that you have out there at this particular point. So again, we love the Argyle pink diamonds, and the fact that the mine is going to close down soon makes it a supply and demand situation that makes these diamonds one of the most valuable and best investments that you could possibly make. Now, we carry Argyle pink diamonds in all colors and all sizes. They started, again, under a quarter carat, and you can get involved starting at about $25,000. You can put money into an Argyle pink diamond that will increase by about 15% to 20% a year unless you're into the vivids, and those go up a little bit more. Then these diamonds, if you put them away for the next 10 years, they do nothing but go up in price. To give you the best indication that I can, in 2003, I bought a 2-carat vivid pink Argyle diamond. It was a tender diamond, and I bought it for $350,000, and today that diamond's worth close to $4 million. $2 million a carat. That's how rare that diamond is. And there's many, many cases of diamonds that have skyrocketed in price over time that people have just held on to. Many times on the show, I've talked about my wife's girlfriend who inherited a 5-carat pink diamond from her grandmother. Her grandmother bought it 50 years ago for $50,000, and the diamond is worth almost $5 million today. So, again, these are not short-term investments. They're longer-term investments. If you're in your 30s, 40s, 50s, 60s, and you would like to retire, put some money into a diamond. A yellow flawless diamond will increase by 15% a year. A $20,000 yellow flawless diamond today will be worth close to $80,000 in about 10 years from now. these diamonds never go down in value because there's maybe 100 of them available a year. It's a tiny little market, and that's for the entire global world type of thing. So we recommend yellow flawless diamonds. They start in the $15,000 to $20,000 range. They do better than almost any investment out there with very, very little risk because, again, there's so few of them, and they are absolutely magnificent diamonds. My grandchildren own those type of diamonds put away for their future. Argyle pink diamonds, probably amongst the best investment diamonds you could ever buy because the mine that produces them is going to close down. You've got D-flawless white diamonds. Nobody even knew what a D-flawless white diamond was until we brought it to your attention. Those diamonds increase by 15 to 20% a year. They're 10 times as expensive as a normal white diamond, and they never, ever decline in value. Another thing about a D-flawless perfect diamond is that they're negative correlated to the stock market. When the Dow Jones plummets, these diamonds will go up the equivalent amount. They're really sensational diamonds. So, again, we recommend very highly that you put some of your money into the rare diamond market. You never put all of your money into one given asset because that's foolish. That market goes down and you've lost everything. You want to diversify. I'm a firm believer in hard assets, as is Bloomberg, evidently, because we've been on the show twice, and that's what the focus of that show is hard assets. Why they really liked us was, number one, we own rarecolordiamonds.com, which is the premier diamond website in the world. We have museum-quality pieces, and we're the only company that has inventory of yellow flawlesses and Argyle pink diamonds. We definitely put our money where our mouth is. We are heavy, heavy, heavy investors in rare-colored diamonds, mostly yellow flawlesses, Argyle pinks, and D-flawless whites. In the newsletter this week, there was one major article that you really need to read because, again, it just backs up exactly what I'm saying. Buy that engagement ring now. The coming supply squeeze in diamonds. Couples thinking about getting married someday might want to consider way in advance planning for that ring. Diamond prices will not be getting any cheaper and might even soar in about 4 years. That's when existing diamond mines will start to tap out and producers won't be able to fully replace the loss of supply. The fundamentals of demand growth, meanwhile, remain firmly in place. As a result, there could be a steep increase in diamond prices starting in 2018. New analysis at Bain & Company projects, and you got to read the article. So you don't want to buy these when it's already happening. You want to take advantage of it before the fact. If the prices are going to skyrocket in the next 2, 3, 4 years, start buying them now. We want you to make the money, not pay the money. The idea behind investing in anything is getting there before everybody else does. I've always remembered, I've been in the investment business for 35 years, but I remember most is an interview with Wayne Gretzky. And when the interviewer said to Wayne Gretzky, what makes you such a phenomenal player, what makes you so great, he says, after he thanked him for the accolades, he said, when most players go to where the puck is, I go to where the puck is going to be. Now, that has always made sense to me, and it should make sense to you also. We want to go to where the investments are going to be in the foreseeable near future. You don't want to wait for 4 years or 3 years or 2 years to get into this market. You want to make as much money as you possibly can, and you want to buy the market at the cheapest possible price. When we first started recommending gold at $250 back 13 years ago, a lot of people thought we were crazy. You know, the thing is that it took almost a year for gold to move from $250 to $300. Once it hit $300, it started to really move to $400 to $500 to $600 to $800 to $1,000 to $1,500 to $1,900, and people that got in at the lower prices made fortunes in that market. And even though the market has pulled back, it's still at an extremely high price. Those that bought gold at $250 are up almost 800% on their investment, which is almost unheard of in the investment world today. The same thing is happening in diamonds. Buy them now. Put them away for your future. Get some money out of the banking system, which is extremely risky. Get your money out of the stock market, which is even more risky, and put something into hard assets. The fundamentals are there. The technicals are there, and again, the experts are coming out and saying that we're going to see a tremendous increase due to the fact that certain diamond mines are shutting down. We know that the Argyle mine, the biggest diamond mine in the world, is shutting down, and that's where 95% of the world's pink diamonds come from. If that's going to happen, and it is because they've already come out and said it is, why don't we buy them now at the cheaper prices and just put them away? Put them away for 10 years, and a diamond you buy today for $50,000 could be $400,000 to $500,000 in the next 10 years. Tell me any other investment that will give you that type of return with the safety that you have in the rare colored diamond market. Not only does that diamond give you tremendous returns, it also gives you other safety factors. It gives you portable private wealth. You know, if some of these experts are right and what happens in Europe and the U.S. actually happens in Canada, you may need to start all over again. And you're not going to be able to do it with stocks and with other assets like that. You're going to be able to do it with a portable private asset like a diamond. How many times I've traveled with my wife wearing a $600,000 or $800,000 diamond on her finger? That's a house. That's what most people in the United States have $10,000 to their name. You put money into a diamond that goes up and up and up in value, you've got an asset that will do nothing but make money for you. And by the way, how do you sell it? We're the only company that can resell it for you. We're the company that owns the secondary market to resell our clients' diamonds. That company is hsfineauctions.com, which is H. Siegel Fine Auctions. It's the only company of its kind. We've had 10 auctions. They've been tremendously successful, and we built this auction business for our clients to resell their diamonds. And we make 10% of the profit. You make all the rest. If you bought a diamond for $50,000, and let's say sold it for $250,000 10 years later and made a $200,000 profit, we got $20,000 and you got $230,000. That's the way we roll here, and that's the way we take care of our clients. So, again, there's not a better investment at this time than the hard asset market. Again, I know that we're frustrated with gold, but gold will definitely take off and run again just based on the fundamentals. Same scenario with silver, and one of the best investments you can make at this time, and safest, is in the diamond market. Yellow flawless diamonds increase by 15 to 20% a year. They never decline in value. They're negative correlated to stocks, and they respond to inflation as well as gold and silver. Argyle pink diamonds, the most sought-after diamonds in the world and the most concentrated form of wealth in the world. The mine that produces 95% of them is going to close in 6 years. If you own one of those diamonds, you can make 10 times your money. Tell me any other investment that will do that for you. And deep, flawless white diamonds, 10 times as expensive as a typical normal white diamond, but they go up every single year by at least 15%. The only time that they do better than that is when the stock market is plummeting. So, again, get the newsletter this week. Read about the articles on diamonds. For those of you that can afford to get into this market, our minimum investment is $15,000. That would be for a yellow flawless diamond. Argyle pink start in the $25,000 range, and those diamonds are, again, amongst the best investments you could make, and the deep flawless whites are more expensive. They're in and around $80,000 to $100,000 to start, but again, they have a phenomenal track record. Read what's in the newsletter. Also understand that if the world economy gets worse and worse, it's the diamond market that will give those type of returns. And what the experts are saying, within the next 4 years, there's going to be a tremendous amount of closing of diamond mines because they're just not producing anymore. And by the time that happens, you could be in gigantic profits. So get your diamonds now. Give us a call. Go on my website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. Go to the investing section, learn about diamonds. Go to the loose diamonds section. Look at our inventory of the most beautiful diamonds you've ever seen, and then look throughout the website and see some of our beautiful rings and other diamonds that we carry. They're phenomenal investments, and again, if you want to make your wife happy and put a smile on her face, put a diamond ring on her finger or put a magnificent diamonds around her neck, and that will put a huge smile on her face. Again, we own also not only some of the most beautiful diamonds in the world, but I also own the last 8 pieces of Elizabeth Taylor's estate, some of her iconic pieces that have never, ever been auctioned before. So get in touch with us. These are amongst the best investments and the most beautiful items you could ever possibly own. And again, there's tremendous pride of ownership and huge profits coming your way. I very strongly recommend you look at our supply and our inventory of magnificent diamonds.
RareColoredDiamonds.com. Yes, the vaults have lots of great, outstanding diamonds. When Boston won the World Series, one of their players said, it's fun to go to work every day at a museum. And for Harold and his sons at RareColoredDiamonds.com, they work with museum pieces every day. For their website, RareColoredDiamonds.com, they're little pieces of art, nature's art. They're nature's Picassos. And this week's diamond is a 1.01 carat oval cut, fancy, vivid pink argyle. Harry Winston said, "People will stare. Make it worth their while." I remember reading a quote from the lady who owned the Hope Diamond, the big blue Hope Diamond. She said, it's not necessarily the wearing of the diamond, it's the reaction that I get when I wear it. And that's what she loved about having the Hope Diamond. One of the things that stands out in my mind doing this show with Harold since February of 2002 is that people always say, if I only would have. If I should have, back when silver was $4 and gold was, $2.50. If I only would have. And the thing is, if Jim Sinclair is right, and we see here, and by 2016, gold go to $3,500, you would think that silver would at least be $60 to $100. There's still an opportunity to make money, lots of money in hard assets, gold and silver. And then on the diamond side, one of the greatest stories, I think, in investment diamond history will be the Argyle Pinks in the Argyle mine being shut down. 90 to 95% of the world's pinks come from the Argyle mine. When they shut down, that is it. You're into a secondary market, and who knows where the prices will go. And the thing that's interesting to me is that don't be in a position where you go, 5-6 years ago, I knew this was going to happen, but, I sat back and did nothing. Harold, I think we have about 3 minutes left here. Now is not a time to sit back and do nothing. Position yourself accordingly. Have that insurance policy in your portfolio, gold, silver, platinum, palladium, diamonds, and be one of the people that can say, I did do that 5-10 years ago, and I'm sitting in a very good situation today as a result.
Well, that's what we want, Randy. We want our clients to be sitting back and saying, I went against the grain, I did what I thought was right, and I won. 90% of the money is made by 10% of the people. All Randy and I want is for our listeners to our radio show to be in that 10%. These are very confusing and dangerous times in the market. And again, I know that the markets don't always go the way that we want. However, we're still very optimistic, very bullish, and we still think the fundamentals for metals to go higher are certainly there. The diamond market is on fire, and it's going to get even stronger and stronger. That's why I recommend you put, a fair chunk of your money, because it's safer, and you're going to do extremely well with it down the road. So, again, Randy, I'm very optimistic and very excited about our future. Again, it's just a matter of pulling the trigger and doing what you need to do to get the job done.
And I think people have to have some patience, too. We're in a situation where these are long-term assets. It's not a situation where you're checking, did it go up a penny or down a penny every day. These are long-term assets you want to hold as long-term security in your portfolio, whether it be diamonds or precious metals. Our newsletter, get it from Harold, RareColoredDiamonds.com. Telephone number 1-800-432-1022. Speak personally and privately with Harold. 1-800-432-1022. RareColoredDiamonds.com. Betting on hard assets, investing in diamonds. And Harold was interviewed by Carol Masser of Bloomberg Television, the TV show Money Moves. And you can see that. We also have the other interview with Deirdre Bolton, Colored Diamonds, an investor's best friend. And we have those two articles from Forbes magazine. Diamonds could soon be an investor's best friend as demand rises and supply falls. Buy that engagement ring now. The coming supply squeeze in diamonds. Get the newsletter from Harold. Obviously, rarecoloreddiamonds.com, the only place to go for investment diamonds. Telephone number 1-800-432-1022. And Harold, thank you very much for your knowledge and another outstanding show.
Well, it's my pleasure, Andy. I wish everybody a wonderful weekend and a very profitable day.
For those that would like to go to the free seminar in Edmonton put on by Worldwide Precious Metals, connect with them. Their website, www.pmc.com, 1-866-623-2002. The shocking truth of the Canadian banking system. They're here in Edmonton on November 18th and November the 19th. Connect with them. Limited seating. Connect with them, 1-866-623-2002 or www.pmc.com. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.